Hey there, traders. Nick Shaheen here for Benzinga, recapping week ending August 1st and looking into next week. MarketFi.com, I do have a product out there, create income with option spreads. You can reach me through MarketFi if you want to message me. I do respond to all messages and questions. Or you can email me directly at sellspreads@gmail.com right here. Also, you can follow me on Twitter. I do contribute all day, every day. Needless to say, this was an incredibly eventful week. That's three times I've said it, 3 weeks in a row, but this one I really mean it. We've had an incredible amount of uncertainty yesterday and today, Thursday and Friday. The week started out with a bang. And if we can, what am I looking at here? Let's look at the SPX, if I can type. Regardless, the SPX is, you have to account for the earnings. So in a little bit, as far as the recap, I tend to listen to the small caps. You've heard me say that before, just because it's a basket of 2,000 stocks and the earnings impact of particular companies is spread out. It doesn't impact the, one or two or three companies cannot move the index so tremendously. So anyway, we had a good start for the week, but then it broke down. So if I look at let's switch this one to a 30-minute, 10-day look, and this one, that's the small caps. You can see we went from looking at 1161 just recently, not too long ago on the 24th, which I believe at the end of last week, to opening on the 28th and then rushing straight down. So it was not a good week for that argument. Same here. I've been following the cusping action, and I'll show you that in pictures as far as the indices are concerned. And last week, the action was also somewhat promising, but this week the bulls got deflated. Although on Friday, on a good note, we did not close at the lows. It looked ugly for a little bit here on Friday afternoon, and then we did recover. We let go a little bit at the end, but far away from the worst case scenario, which is encouraging. So what happened? The it's important, regardless of what happened, it's important to know why it happened. More important to know that, I should say. So the why it happened will let me know how to trade it, and let me know if I need to change my thesis. My global thesis has been we have room to move up, and with some occasional drop downs, but no major whoosh with the current variables. I need a new shoe to drop in order for me to get scared. So, too scared, I should say. So, I've been somewhat bearish, but with room to grow. And whenever we get sell offs like this, I want to be bullish, but not before I know why we dropped. Yesterday, Thursday, we had the Fed event this week, and the Fed statement I thought was very bullish because they just were very bullish. They said even when we do raise rates, it's going to stay low for a long time, far beyond whatever. So, regardless, they're not in a rush to raise rates. And the fact that they're looking at labor and looking at the makeup of labor, the new jobs, what kind of new jobs. So that's also it's like they're looking for reasons why not to hike rates. I'm fine with that. So the drop yesterday was because of the fear of rate hikes, and because it came with a spiking TNX, which are the 10-year rates. So today was the opposite. We did not have a rush of a TNX. The TNX was cut tremendously. So today's drop was geopolitical. So yesterday was the knee-jerk reaction to fear of rate hikes. Today was just people being nervous about uncertainty. What scared me this morning was Germany's DAX was down 2%. They, for me, represent Europe. I don't look at France for Europe. Really, it's Germany. So when Germany's worried, and they are worried, they have issues. But like I said last time we had issues, everybody's watching the road. We are less likely to have an accident. As opposed to '08, nobody was watching the road. Nobody was anticipating this whoosh down. Now we're all bracing for impact. And even if we do have an impact, it should be less impactful because people are ready for it. So if my assumptions here are correct, What do I do next week? Okay, so next, what do I expect next week? If left alone, meaning absent headlines from geopolitical events, Gaza, the list is long. We've got banking issues and Bulgaria. I don't know, some areas other than Argentina, and so that's on the radar. Gaza, unfortunately, is on the radar. The Russia-Ukraine struggle is also on the radar. So all these have been known for a while. So there's no change. There's no change. The Fed's still there. They're not raising rates anytime soon. Also no change. So all these worries have been in play. So left alone without new headlines, we should be quiet. And the longer we go, every day we go without a headline, major headline, then the bulls will start to get their feet under them. So today's whoosh down may have given us a peek at worst case scenario for next week. So knowing that, how do I trade next week? Last week, I gave direction on how to trade it, and let me review. I said I'm not playing the weeklies, thank God, and hopefully you listened. If you didn't play the weeklies, you didn't get hurt. I said I'm not playing the weeklies, meaning I didn't want to take any credit spreads in the weekly trades, or even debit spreads, or even long whatever, because the market was violent, unexpected to be violent. I said I expected fireworks, and it happened. I said I also expect to be bearish in any trades I do. So I did some trades. They're out publicly. Members got them first, and they were all bearish, and we booked them. And so we, on a really red day, having not spent a minute worrying about any of our positions, tells me that we were well prepared for this. Unfortunately, most people weren't. So hopefully you were listening to what I said last week and got lucky into taking some bearish positions at least. We didn't chase pops early in the week if we had them, and luckily we didn't, because they were just relief pops like I told you they would be. Apple. I was inflammatory last week. I said Apple is not likely to break the 100. I see a 99 resistance line. I see an even bigger wall at 98. Oh, 99 and 100. And then as the days ticked, the wall went lower, and then the bears got bolder on Apple. I said the closer it gets to 700, the bulls will lose faith. So the longer it takes it to break that 100, the less likely it will break it, but if it does break it, it's going to leap up, just like what happened at the $1,900 level on the SPX. I also told you that the bears have not given up on the $1,900 level SPX. And early today in the pre-open, we were pretty darn close in the cash. So I was right about that. And the 1950 level, I also said they hadn't given up. So hopefully a lot of the bears flush their positions there and reset them in a better statement. And that hopefully for the bulls, because then that wall will come down and it'll be easier to build a base from here to move up a little bit. So how do I trade it this week? So last week we did no weeklies. This week I kind of can do weeklies, but I want to see how Monday opens up. I see no need to do the weeklies, so I'd rather do an August position with about 14 days left on it by Monday. So one can snipe some bullish positions, but leave yourself room for mistakes, for oh crap moments like this. These last 2 days, those are oh crap moments. Yesterday the small caps was down 2.3. The major indices were down 2. Nasdaq was down over 2. We closed a little better than that, but pretty darn close. Today we were down just as much, and then we recovered. So those are oh crap moments. And if you play it too tight to the line, then you're screwed right away. Leave room for error. Leave room for have a plan B. Should this happen, I can do that. Should this happen, I can do that. So snipe bullish positions. If you're bullish the market, or if you're not bearish the market, or if you don't foresee doom, maybe dip into a few longs. Pick them carefully. Members will know what I'm picking, and if you need any direction, hit me directly. Maybe I can help you out a little bit. Snipe some giraffes. What does that mean? Don't go out and kill giraffes if you can find them anyway. The idea here is there are a lot of extended names, and the extended names are vulnerable. I picked on one today or this week, and I cashed it in, and it was this one right here, Equinix. I got lucky, and I picked on it, and we made a little profit on it. I'm out, and I can re-enter. I got out around 210, and now it's 214. So it was straight puts. I gave myself some time to be right, and I picked on GoPro, and I did pick the correct direction, and it was a small lotto position. I did not pick the right level, so I lost a little money on that one, just about 50 bucks or so, so I wasn't crying over spilled milk there. But there are a lot of stocks like that are extended. And let me see if I can visualize to you what's extended. By the way, here is what I was talking about earlier. You know, rising wedges usually are bearish, and the longer you spend out here, the longer it is likely for you to drop down. This happened before at the $1,900 level right there for SPX, but look, it was higher lows and knocking on the same level several times. And then right here, the bears got lazy and courageous, and they said, oh, we've won so many battles before, let's dig in our heels. And they dug their heels, and as soon as we broke it, we leaped up, and then they were all in trouble. But today they had the chance to get out, and hopefully they did. They've been rolling, and hopefully today they reset a little better situation. Well, this one is different. Higher lows, but we also have higher highs. So these tend to be rising wedges that break down. And as I said, I've been looking at it, and it's cusping. It's cusping. And this week's candle, this is a weekly candle, by the way. Big red candle, right? You can also see it in the SPY, and I reason I'm doing this, I'm gonna get to the last one. This, you can see it even better in the SPY, the rising wedge. RUT is going to show you, RUT is a small cap index, and this one's going to show you whenever it comes up. It's going to show you the fact that we've had 4 weeks of redness. I'm looking back, I don't remember seeing 4 weeks of redness. I've seen a downtrend that's a little longer. So it's important that that today should be close to the bottom of the bucket here. We have had a deeper candle right around here, but it's still nothing too serious. I can live with that. So, but now, is it head and shoulder-ish? Like if you know, one shoulder, head, shoulder, and that would target 11 down here, close in the low 1,000, maybe 1020, 1025, eyeballing it. So if we stabilize here, then I'm not too worried about it. But anyway, I was talking about extended giraffes, Equinix. Oh, look at that extension, right? So I said this is way too extended, and these candles are indecisive. So I expected it to drop right here, but it didn't. So I did the short this week, and I cashed it in. I did not hang on to it. So now I can reset it next week with free money. What do I mean by free money? The money I made from this trade, I'll lay it out for another trade, and now I'm still shorted, but it's free because I already paid for it with winnings. Does that make sense? House's money. So this is how you can snipe a few shorts. Can I pick another one? I don't know. Tesla had a great day today. No, I don't like that one as well. There are a few names now. The name they escape me a little bit. Buffalo, was it Buffalo? I came across a couple like that. Whoa! Look at that candle. It took the whole range. It took the whole range. It's been playing in that range right there, rising wedge. Now it's the whole range. So guess what? Next week, this might be a nice setup for a short. All depends on how it handles. Somebody asked me if it's time to take a 140, 135 credit put spread. This is a bullish play, saying that it's finding a bottom. It's not going to break down below 140. I'm not ready to take that bet right here. I want to see how it handles itself around 141 if it gets there. Then I'll decide. Okay, maybe if I get a visual here, maybe I can come up. CMG, I think, had a good week today, this week, or today. That's a very, very indecisive candle right here, Doji. So that wasn't it. LinkedIn had an incredible week. Wow. Tempting to be short that guy, but this is, maybe I think it was oversold down here, so this is just a one I do not want to short. The banks were kind of weird today. I know Panera had an eventful week as well. I've not traded Panera in a while. I wanted to short it. See, this is looking ugly for Panera, but not ugly enough to be interested in it. I want to go Visa. I want to trade Visa via Leaps as soon as it settles down a little bit. I want to see how it handles itself on this trend right there. This is not enough for me, information for me to go long or short. Google was punished this week, and I don't think it deserved that punishment. I'm willing to step in long soon. I want to see how it behaves on Monday, and I leave room for error. Okay, Apple, I don't like the way it's trading. I've said it before. It got capped, and now we're headed downwards. So it needs a flying car. By that I mean it needs a headline to make it go up. Amazon, boy, people are just hating it again. I'll get brave again when it comes down and revisits lows. I'm not ready to cash that knife yet. It may be 12 inches long with a 1-inch blade. Do not want to go there. So Baidu, I'm not touching right now because of what's coming down the pike. Although that would be a good giraffe. That I would look at that one next week to see if I forget. Please remind me to see if we can short it somehow. Yep. But anyway, this is a crazy stock, crazy momentum, and headlines could definitely take it up and down. So the bottom line is you got to know your levels. Whatever position you take, you have to make sure you're hedged. You have to make sure you're not throwing darts. You have to make sure you have a thesis. I told you my thesis now. Next week, my thesis is if there are no headlines, we should start finding our footing by we bulls. I know I sound like a bear sometimes. I'm not. I don't care. I trade both ways. I take credit spreads wherever prices are not going. That's why I don't care. I want nothing to happen ideally, and all of my trades will be winners if nothing happens. If major headlines happen, then my trades are in danger. So, but regardless of my thesis is, whenever I put the trade on, I leave room for error. So when I do this trade, I don't do it right here. I leave room for error. I go down lower, and if I'm shorting, I don't short right here. I short much higher. Just leave room for oh crap moments, or leave room for plan B. If this happens, I can do something about it. When you play the weeklies tightly, yes, you can book the profits every week, but so can you when you play with the leaps. I mean, you can, if you follow me, you'll see I do trades from December and I scalp them in a day. I opened the trade today. I could have closed in 15 minutes and made 50% of maximum gain. Doesn't happen often, but it does happen. I can open a December trade. I opened a September trade not too long ago, but few days ago, and then I closed it for the portfolio and booked a profit at a little more than 50% gain of maximum gain, and we weren't even near trouble. It was a short the SPX September trade with 80%, 90% chance of success at 2075 for the SPX. So you tell me that was a dangerous trade. It wasn't. It was money in the bank without even sweating, and it was a scalp. So why do you insist on playing the weeklies? I don't know. Not you personally, but a lot of people do. If it's too tight, just take it out another week or 2 or 3 and move it away from the line. You can play the same trade, just use options and use time, bend time in your favor. That's all I have to say. So recapping, terrible week for the Bulls, but a good week for the Bears. I booked a lot of bearish plays, profits, and ones I didn't, I hedged them because on the whoosh down, I made them into iron condors, and I added more credit. And next week, have a plan, play it. If you need help, reach out to me. Again, this is Nick for Benzinga, and you can reach me at sellspreads@gmail.com or on Twitter. And thank you for the retweets, everybody. Thank you for the interaction, and I'll talk to you next week.